what are candlesticks? Candlestick, according to my own personal definition, I can say that it is the language of the market. Okay, I'm saying this so that you will know the importance of what this candlestick is representing and why you should pay close attention to them. Take, for instance, if you travel down from one country to another, let's say you moved from your hometown, your country. If you are in Nigeria, you decide to travel from Nigeria to China, and you don't understand the language of China, even though if you have money to spend or you have money to take care of yourself there, your stay in China will not be comfortable because you don't understand the language they are speaking. There is no way you can communicate with people around there. Even when there is need for you to get some things, probably you decide to buy a particular product from a nearby shop. They can't understand what you're saying. So there is need for effective communication. For you to say something and for them to reply you, it actually means that the both of you understand what you are saying to each other. All right. So why I'm bringing up this analogy is because you also need to pay attention to what the market is saying. All right. If you understand the market, just like I said, when you are communicating with someone, there's always when you're passing information, there is a sender and a receiver. When you send an information, there should be a receiver, and the receiver should be able to decode the information that you've sent. All right. So for you to be able to understand what is happening on the chart, you are supposed to understand the language of the Forex market, which is what the candlestick. You should know what those candles are representing, and the ones you should be paying attention to when you are running your personal analysis and you are willing to take entry on a particular pair. Because without you paying attention to these candles, you may realize that after making entries, just like someone came to my DM, I think a few days ago, to tell me, like, he placed an entry and then the market came retraced to take him out, and it eventually went in his desired direction. So, and when I asked him to send me the chart as usual, I realized that the problem is not actually because of probably his decision in the market is totally wrong, but his entry. And he did not wait for candlestick confirmation before placing that entry. And that is the reason why the market retraced against him and hit the stop loss. And then after that, the market formed the normal candlestick that is needed, and it went in this direction. Meanwhile, he was no longer paying attention to what the candles were saying. So that's the problem. So having said all of this, I am just going to do some illustration about these candles. If you look at my chart carefully, or if you look at my screen carefully, this is GBP USD, all right? You see here 5 minutes, 15 minutes, 30 minutes, 1 hour, 4 hour, daily, weekly, and monthly. These are time frames in the market. So currently, I'm on the 5-minute time frame, all right? So what this means is that each of these candles you are seeing on the screen, it took 5 minutes for this candle to finish, to complete its formation. If I go to the extreme of this chart, you will notice that after every 5 minutes, the next candle will be formed. If this particular candle that is forming, in the next 5 minutes, is going to complete its formation, and then another one will start. If I go to the 15 minutes, it simply means that each of the candles you are seeing here, irrespective of the size, it will take 15 minutes for that candle to be formed on this particular time frame. In a similar way, if I scale down to if I go up to the 30 minutes, what it means is that it took 30 minutes for each of these candles to be formed. And if I eventually go to the monthly time frame, it's the same thing. What this is telling us is that each of these candles is formed after every month. Okay, so it will take 1 month for this candle to be formed. This small candle you are seeing here, it took a complete 1 month for this candle to complete its formation. So whichever time frame you find yourself in, just know that each candle you are seeing there, each of the candles, actually take that particular time frame for one of those candles to be formed. Okay, I hope that is taken. Now, the next thing you want to know is to understand how these candles are formed from different time frame. So this will take us to candlestick anatomy, understanding the formation of candles. For instance, if you have a candle such as this, okay, so just pardon me, let's assume this is a red candle. If you have a candle like this and you have another one, I have to change the color of this particular one. Please make sure you follow up with what we are doing so that we understand how these candles are formed. Now, if you have these two candles, let's assume this is what? This is the 5-minute time frame. Okay, so we're saying that this particular candle is 5 minutes. So let's assume this is the 5-minute time frame, and you have these two candles. Okay, so when you observe these two candles on the 5 minutes, the resultant effect, when you scale down to the 15 minutes, what you're going to see will look like this. When you make this type of observation on the 5 minutes, I'm explaining how these candles are formed on the chart. Okay, because you have a time frame such as what? 1 second, 5 seconds, 10 seconds, 15, down to 1 minute and all. But these are just the time frame I work with. That is why I'm starting with this. Now, this if you are on the 1 minute, 5 candles on the 1 minute will combine together to form a candle, a single candle on the 5 minutes. In a similar way, 2 candles on the 5 minutes will combine together to form 1 candle on the 10 minutes. So this is how these candles are formed. Or let's assume this particular one is just, let me call it 15 minutes. Let's assume this candle you're seeing here is the 15-minute candle. Okay, let's assume this is the 15-minute candle. You have this and this. It means, based on the explanation I've given you guys so far, it implies that it took 15 minutes for this red candle to be formed, and also took 15 minutes for this green candle to be formed. All right. Now, I'm saying that the resultant effect of these two candles on the 30 minutes, because 15 minutes plus 15 minutes is definitely going to give us 30 minutes. So if you scale down to the 30 minutes, the candle you are going to see is this one. This is the candle you are going to see. Okay, I hope that is taken. So in a similar way, if you combine, what I'm trying to explain is that in a particular time frame you find yourself, if you combine 2 or more candles together, they are going to give you a particular candle on the next time frame. For example, if I have 2 candles on the 30 minutes, I should have a picture of how the candles will look like when I scale down to the 1 hour. And the reason why I'm explaining all of this is you should be able to navigate within your time frame, especially the concept of multi-time frame analysis. So you have to understand how you can probably use the different time frame that you have to make trading decision. Now, there are special candles you should be paying attention to in the market. We have the likes of hammer. There's a candle called hammer. This particular example you're seeing here is known as hammer. There is another candle known as inverted hammer or shooting star. Okay, like I said, I'm going to list them and then explain each of them to you guys to understand how and where you want to look at them. A shooting star looks like is the opposite of this one. It's just the opposite of hammer. This is how a shooting star looks like. Now, when you want to see hammer, you want to trade hammer if you are anticipating to take a buy in the market. Like hammer is a kind of candle that you want to see when you are willing to take a buy in the market. Okay, both hammer and shooting star, they are known as rejection candles. But I said hammer is when you are looking for a buy position and you don't just open a position for a buy simply because you see or you come across a hammer candle. Okay, the type of where you want to see them is on your POI, okay, your point of interest. You want to see those candles form on your point of interest. What do I mean by point of interest? Point of interest simply means where you are willing to take entry into the market. Because after running your analysis, you don't just want to enter randomly. There are special levels you are looking at in the market to take your trading decision. Those level you are willing to make those entry from are known as your what? POIs. Okay, I hope that is taken. Now, I talked about inverted hammer or shooting star, which is the current candle we have here. This type of candle, you want to see them on your resistance level. Like I said, when you're talking about hammer, you want to see hammer at your support where you are willing to take a buy in the market. Now, when you are willing to take a sell, you want to look for a candle such as inverted hammer or shooting star. This type of candle will help you make a decision for a sell. For a recap, I'm saying that hammer is used, you want to see hammer when you are willing to take a buy position in the market, and you don't just want to trade them in isolation. You don't trade candles in isolation. You combine them with other tools such as support and resistance, trend line and channel. You combine them with those tools to make your trading decision. Okay, I hope that is taken. I hope that is taken. So for shooting star, you want to see them at your resistance zone. All right, your resistance zone where you are willing to take a sell position from. So that is that about that. There is a candle called morning star. Okay, before I go to that, there is another one. I'll just list them. Yes, there's a candle called morning star. There is another one called evening star. We have also a candle known as engulfing candles. Now, engulfing candles are of two types. Okay, we have the bearish engulfing candle and the bullish engulfing candle. Okay, so we are going to stop at these 4 candles which I have listed for you guys. I've talked about shooting star and inverted hammer. I measure evening star and morning star, and I measure engulfing candles, which I said they are of two types, the bearish engulfing candles and the bullish engulfing candle. Now I'm going to explain each of them for you guys, and then we stop there. Like I said, there are lots of candles. There are different types of candles you can think of. There are many, you can't exhaust them, but you don't just want to bore yourself with many of those candles so that you will not get yourself confused while looking at the chart. I'm saying this so that when you come across some candles, you should know what is likely to happen next, because there are so many things that is responsible for why you see market reversing against you, or why you see market going in a particular direction. There are so many things that is responsible for those things, and part of them is candles. Because if you are in a position for probably you are on a buy position on a particular market, and all of a sudden you observe that you are getting close to a resistance zone, and then the next thing you see the chart, your candles, the next thing you see on the chart is that there are special candles that you can observe, such as inverted hammer. If you observe those, if you made those kind of observation, it is an indication telling you that there are chances that this market will start reversing. And if you are willing, you can just you want to take your profit after making those observations. Okay. So this is one of the benefits of knowing more about candles. So like I said, I've mentioned evening star. Evening star are 3 candlestick patterns, meaning they consist of 3 candles. I'm going to draw them just for you to see how they look like. You have probably the first candle could be green. Then you have another candle which could be a doji, and then you have the third candle. This is an example. This is an example of evening star. Okay, this 3 candle combined collectively is called evening star. All together, we call it evening star. What this thing is telling us is that you observe a bullish a bullish candle, okay, and then this particular candle, this that looks like cross, is known as doji. And doji is an indecision candle. What I mean by indecision is it's telling you that both buyers and seller, they are at equilibrium. No one is winning at this point. This particular candle is telling us that the buyers are winning. That is why the candle is bullish. That is why the color is green. Now, this second candle is telling us that it is an indecision. No one is winning at this point. Then the last one, which is bearish, is telling us that at the end of the competition, the set of people that won this battle are the bears, which are those that are selling the market. So what it means is that this market might likely to start selling. So where do you want to see this type of candle forming? You want to see them form at your resistance level. You want to see this candle form at your resistance level. Why morning star? You want to see them form at your support level. Okay? So take for instance, if you observe, make an observation that the market is moving like this, to the upside, and then all of a sudden, from this point, the market gets to this point and form this type of candle. The next move that may likely happen is after this candle is formed, is that the market will start moving from here all the way to this point again. Okay, so this is where you want to observe, this is where you want to start applying your evening star. So when you talk about morning star is formed at the support level. Okay, this is your resistance. This level is known as your resistance level. Okay, so this is your support. This is your support and this is your resistance. Like I said, you want to observe morning star, you want to observe evening star at your resistance level, and you want to observe morning star at your support levels. So this is how a morning star looks like. I told you they consist of 3 candles, the first, the second, and the third. In a similar, just like I explained in terms of evening star, the first candle is telling us that the sellers are still in power. Okay, the bears are still in power. Now you have this doji at the middle telling us that there is an indecision at this particular level. So when this battle started, the sellers are winning the battle. Okay, but at this point, nobody is winning. But at the end of the battle, what happened is that the bulls or those that are buying the market eventually won this battle. So the resultant effect is that you may likely see the market after the formation of this candle rallying to the upside like this. So like I said, you want to see your candle, you want to observe your candle, you want to observe this type of candle at the support level. Okay, morning star, you want to see them at the support level. Even this type of candle as well. This is what I mean when I said you want to see them at your resistance level. This is a shooting star. So this is the position you want to make this observation. Like I said, you want to see them as your resistance, and you want to see morning star or hammer at your support. If you don't understand how a valid resistance and support is, if you don't know how which zone is a valid resistance or which zone is a valid support, there is already an available video on support and resistance. So just make sure you go through the video to understand it better. So the next candle we'll be talking about is engulfing candles. Okay, like I said, we have the bearish engulfing candles and the bullish engulfing candle. So for the bearish engulfing candle, you want to see them at the resistance level because they are candles telling us that the market wants to start selling. Okay, so this is how it looks like. This is how it looks like. The reason why they call this candle engulfing candle is because the second candle completely covers the first candle. You know, when they say an engulfer, like just to cover up. Okay, that's what it is. So this is how an engulfing candle looks like. Now, the opposite of this candle is what you want to see at the support. Okay, this is bearish engulfing candle. You want to see them at the resistance level, telling you that the market wants to start selling from here. After making this observation on your zone, it is an indication that the market wants to start selling all the way to this place. But then you want to see your bullish engulfing candle at your support level. And this is how a bullish engulfing candle looks like. Will look like this. And then the next candle you will see is a candle that will completely engulf the previous candle. So the color of this one has to be bullish. Okay, so this is bullish engulfing candle. This is bearish engulfing candle. This is evening star, and this is morning star. Why this is shooting star or inverted hammer? So I've explained to you guys where you want to see these candles before making decision. Like I said, you don't trade candlestick in isolation. You want to see them at your valid zone, like your support and resistance or your trend line before making any trading decision. You don't just open your charts and probably because you see any of these candles and you start trading them. it is not advisable to do so. You want to see them on your support or your resistance before you can be able to do that. So that is that about candlestick. That is that about some candlestick that you want to pay attention to in order to make good trading decisions. The first thing, you have to wait for the signal to come to the Telegram group. Once you receive the signal, for example, this one said we should buy Euro JPY above 140.035. So the next thing, you go to your chart and look for that particular pair, Euro JPY. Okay, so this is the pair. Now, the next thing you want to do is you have to go down to the 5 minute, because this particular signal is more 5 minute time frame is the best time frame to use when analyzing this signal before taking your entry. So you have to scale down to the 5 minute time frame. You reset your charts and try to, the next thing is once you have your pair, the next thing you want to do is find a way to look for that particular price level. Okay, I'm using this horizontal line. Remember, the level we are looking at is 140.035. Okay, so I have to edit it so that we have the same. I'll have that particular price level, 140.035. Sorry, 5. Okay, this is the particular price level that we are asked to take this entry from. All right, so the next thing you want to consider is what time is this signal released? The time. Okay, you have to pay attention to the time, because you don't want to come in. A signal was released by probably 6 a.m. or 7 a.m. and you're coming in by 2 p.m. or 3 p.m. to start making execution on the signal that will be released after many hours. So it doesn't make sense. So you have to pay attention to the time the signal was released before making any decision. So after that, there are 2 major conditions you have to pay attention to. The first condition is candle close, okay? And the second condition is breaching of zone. So what do I mean by a candle close? You have to observe that there is a candle close at least 15 to 25% above the level you are willing to take that buy from. So this particular price level is known as the CMP price level. Okay, so you have to make sure that there is a candle close above that particular price level. So if you look at this, after there is a rally, although if you observe this candle very well, it's not actually moving in momentum. Okay, it's not actually moving in momentum. You can see a whole lot of ranging. If I scale down to the 1 minute time frame, or thereabout, you will see that within this, you can see this choppy move. You can see the market kind of consolidating. The move is not actually that impulsive. Okay, the move is not impulsive, so it's actually good. But what you have to pay attention to, the first condition is there should be a candle close. There should be a candle close. So if I zoom out properly, you will observe that this is a candle close. So let me go back to the 5 minutes so that you can see it clearly. Okay, so you will observe that at this particular point, this single candle closes above it. But in case you are not convinced, you can wait for the next candle to be formed. All right. So if you look at this particular candle, this one closes above this. This one closes above this, above the CMP level. So after the closure of this candle, you have every reason why you should enter your trade. And the next thing is you have to go and pick from your TP1 to 3. You choose any one. I've seen people asking what is T1, T2, and T3. I've tried my possible best to explain to them that those levels are actually take profits level. Okay, so let me show you. We are talking about Euro JPY. So we are given three levels. You have the T1, T2, and T3. So the T1, T2, and T3 simply means take profits level 1, take profits level 2, take profits level 3. You can actually choose any of this particular one, any of these levels. You can choose any one to place your order. Okay, but why you are choosing this particular, anyone you are choosing, be rest assured that before your market will close, is either the market get to that particular level, that is if you are in profit, or it will get to your SL. Now, as a beginner, I always advise that you start from your T1, start using T1. It is advisable to use T1 if you are a beginner, because sometimes trading has to do with patience, okay? And there is this zeal that once you are in profit or thereabouts, you may not have that mind of winning to stay long, because you'll be so excited and all of those things and want to take your profit and off. Or probably if you are running in loss, you will not be able to consider to stay long in the market. So the best thing is try as much as you can. If you're a beginner who have not been trading before, start practicing with the first TP, and then make sure you copy your SL correctly. Your SL will help you to stop the market if it is moving against your direction. For example, if you are willing to buy and you place a buy, by placing a buy, what you want the market to do is the market should start buying to the upside. But if peradventure, after placing your order, and then the market starts moving against you to the downside, it is your SL that will help you stop the loss. Because if it is moving against you, you'll be losing money. But when you have your SL written on your execution platform, it will no longer take all your money. It's just a portion, just a bit of it that is going to cut off. So this is the reason why you are not to place an order randomly without considering some condition, or probably putting in the right SL as well as the right take profits level. So that is that about the first condition. Like I said, the first condition is candle close, and then the second condition is breaching of zone. Okay, I know some of us who have been attending this section might consider this particular thing as succession of candles that is breaching this particular zone. But what you don't know is you should also pay attention to consolidation before that particular zone was breached. Okay, you have to pay attention to consolidation. That is the reason why I stayed down to the 3 minutes or 1 minute time frame to check what exactly happened here, this particular level. If I stay down to the 1 minute or 3 minutes, you will see that there are a lot of consolidation that happen within that region. So this is the portion I circled. As you can see, you observe that there are the candles consolidated within this particular region before it eventually broke out successfully. So you have to, practice with time. You will get used to all of this. And I'm sure many people must have been missing entry just because they don't still understand the condition before they need to see before placing their orders and all. So like I said, the next thing you want to pay attention to is what? Breaching of zone. So what do I mean by breaching of zone? You want to see, I'm looking for a move that I can use to explain that. Okay, yes, this is a very good example. So this is what I mean by breaching of zone. Like, let me scale down to the 3 minutes for you to see what this candle will do. If I scale down to the 3 minutes, I'm going to lose some chart. But what I mean by that, when you observe that there are power candles, what I mean by power candles are all these long, you can see how long this is just a candle. You can see how long it is. When you observe this type of candle in succession and they break through the level you are willing to make that entry from, you should not take that particular signal. You should let it go. Okay, the signal that I've released are more than 2. They are up to 3, 4, depending on how many that is released in a day. So once you make that particular observation, you should not take it. If you observe that there are succession of green candles that is breaching the zone you want to take a buy from, you should not take the signal. In a similar way, if you observe that there are succession of red candles breaching the zone you are willing to take a sell from, you should not take the sell. You should neglect the signal.